There's a lot of pressure on your company and a lot of pressure on you at the moment from activists. They've been all over the company from last year. What needs to happen from here to satisfy some of those activists? Do you think spin-offs are going to be necessary?
At the time I joined in 2022, we announced a transformation program. Given the issues that we face, it would take 3 years to complete that transformation. And as I mentioned, executing to that transformation plan is the best thing that we can do for our shareholders. And 2 years in, very pleased with the progress we've made. So the single best thing we can do for our shareholders is actually continue to execute on the plan as we have been.
All shareholders should be activists, in my opinion, because you own a company, you should get involved with the running of it as well. But how engaged are you with those activists versus just cracking on with your 12-point plan?
So we have very constructive engagement with all investors, including...
They want a breakup, basically.
We've got a broad-based conversation with them, and very pleased with the constructive engagement we've had. We engage with all of our shareholders, of course, and we listen very carefully. But we've got a very comprehensive plan, multi-year in its scope, and it's aimed at not only addressing the root causes that have held us back over the years, but also, that's in our largest business, but also driving cost improvements right across the group and nurturing our strong businesses. Right? And so we feel very good about the plan that we've got.
I know, I get that, but you're definitely not thinking of spinning off one or two of the units.
What we're focused on, Steve, is delivering shareholder value. And for us, at the moment, that's about executing our turnaround plan.
I've got to get to China. It was the main reason why the last time round the shares had a very large decline, actually, as well. I'm just looking down, for instance, at sports medicine, joint repair and reconstruction. You know, I could talk to you about that personally, my own injuries for ages, but I won't bore you now about my peroneal tendonitis.
I'm sure we've got solutions for you, Steve.
Well, yeah, I hope so. No one else seems to. I've been to the surgeon, the osteo, the physio. Yeah. Anyway, that's another story. More importantly, how bad is China?
So China historically has been one of our largest markets. And what we're navigating through is the government's efforts to bring costs under control, so they've implemented price controls under a volume-based procurement program, and the encouragement of local manufacturing. So they started with our orthopedics business a couple of years ago. That took about 2 years to play out. They introduced this price control into our sports medicine business, where we are the market leader in China. And there's two big components to our sports business, the first of which went last year, and the next tranche of it is poised to go in 2025. So what we're focused on is actually, first of all, we remain in the market. We've got a commercial team in place, and we're navigating through these set of changes. So it's a large and attractive market. We're committed to staying there, but at the moment, it's about navigating some difficult kind of exogenous factors there.
What about tariffs? Are they going to get in the way when it comes to the Chinese business?
Look, it's a dynamic situation, so we're grappling with this as most other companies are. We've been had a long track record of engaging with administrations in the U.S. and other places, as changes occur. So at the moment,
where could it catch up with you if there's going to be an issue?
We are well positioned at the moment today. We've got a global manufacturing network. Most of the U.S. business is served out of the U.S. So we feel good about our ability to navigate through that. But of course, it's a dynamic situation. We're grappling with that as we move forward.
Let me ask you about the profit margin, because the full-year trading profit margin expected in the range of 19% to 20%. But there have been issues around the accounting that you're using, and this has been from Dragon Eye Research. They accused you late last year of using accounting techniques to bolster the trading profit margin, which of course was lower than this. What would you say to those accusations as you can talk about a decent profit margin coming?
Well, they had no basis in fact. Our accounting standards have not changed. As we mentioned here in Q4, we were able to deliver a very healthy trading margin increase of 80%. And it's as good as 80 bips. As good as the 80 bips numerically, what's actually even more impressive is we're able to offset more than 700 basis points of headwind coming from inflation and other macro factors, and of course the impact of China that we just talked about. And so there's been no change to our accounting standards, and we're a public company, we've been around for 170 years, and so there's no basis in fact to those assertions.